Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's October the 30th. This will be our chart lesson for today. And yes, I did double check my volume today, so I won't have to do the chart lesson twice, I hope, barring no other. Never say never, because there could be a power outage or something crazy happen, but let's hope that doesn't happen today. But today's FOMC day, and you can see what happened once that news came out. It got really crazy. There's a fairly um, detailed trend channel to the downside here. It was a little, sketchy in the beginning. I originally had it right here, um, but as the day wore on, I figured out it's up here, and you can see it came into play. And there's like a median line, and then it's probably more like that right there, and then an equal distance down here, and we overshot it on both sides. We had the trend line break here, and now we've been rallying out of there ever since. And if you're still going, there's a fairly obvious trend line right up through there. Just verified on the other side. Yep, you can see that. That's pretty obvious right there. But we're still fighting this downtrend, and because of the FOMC, my goal is always to be done by noon on those days, at least an hour ahead of time. I may hang on to some runners, but you see what would have happened if I ran on any runners. They would have ran the stops easily, and then it still goes lower, so it doesn't hardly do you any good. You just never know what's going to happen, and it could jump. I mean, I've actually seen it jump before, and it could skip over your stop, and next thing you know, it's going the other way. So just, my feeling is you need to be out before FOMC news comes out, because as you can see today, it was pretty wild. So, but I'm gonna put this trend line on here too, just to show you what I saw earlier. I was trading off this line being right here earlier, and you can see it's actually, I think I had it a little steeper like so. Um, and you can see if you copy that, still fits on this side too, so it was definitely valid. Um, and that's what I was trading early. So that gave you these two easy shorts. Um, I'll talk about this long. Normally we wouldn't want to go long in here, and even here, looking back on it, I was probably being a little too risky. I talked about this trade with another trader, though I think they maybe went long there too. But it looked like a trading range, and anyway, it's strong support, and as we've talked about lately, you can see that support across there. Strong support normally bounces prices, and it's been fairly common lately, so that was the reason for my wanting to buy that one. But let's talk about these trades I saw up here. Um, it really looked like a trading range. It looked like we were just trading to the other side at that point. Um, I like this for a second entry short coming off this high. I noticed that we hadn't had any break higher until right here, and it's really kind of a failed second entry long, because notice we went higher, we pulled back, then we turned up, and then we turned down. It would have been nice to see prices break below that bar, but the fact that we tried to go up and test it again and then turned down and went out, that's a nice sign. So anywhere between those two bar, after this bar, right, this is your signal bar right here. So any break of that, you might have used a limit order there and probably would have gotten filled depending on where you used it. But stop's the way to go most likely there. I just used a stop on my entry there. Then you had just like a little two-legged correction back to that same trend line. You got a little small bar. You might have waited on the next move, the failed second entry long there off that top. But then it looked too much like a trading range. But here you can see two clear legs back. I like that. Just enter with a stop right there. Easy scalp. No big runners or anything. And then because of the way it's been acting around support lately, I bought right here. Or you can see there's a little one tick trap right there. Notice those lows. We broke lower, we turned up, we came back and we tried to go lower again right there. It tested it and turned up. So I like going long above that little doji. Easy small stop and easy scalp. It came right back and got the runners. Unfortunately, I didn't get a runner on this one, and then it turns back up again. So I like that trade a lot, just simply because of the bounce off the little failed break low, or the bounce off the overnight low. It almost always bounces off those overnight lows and highs, and that's what usually forms your trading ranges. I scolded another trader for, I think he bought up here. Um, But the difference is, if you're going to buy when prices are moving lower, you got to buy the lows. You can't buy the highs. And same thing, if you're going to sell, you can't sell the lows. You got to sell the highs. Uh, but I scolded a trader for buying somewhere up here, and he tried to justify his reasoning. But you can't justify buying up here. No way, because even if you consider this the break of the trend line, you're still usually going to get a retest. Now sometimes you'll get a little retest that just retests the trend line and then it goes higher. But there, look at all that overlap, the dojis, it's congestion. You got to buy the highs. There's not room to get out. There's strong, there's strong resistance across there. You just can't buy that right there, because that's what happens to you. If you're going to jump out there and try to be smart and buy the bottoms, you got to buy low like I did. And I almost didn't, I almost got burned myself. And looking back on it now, I should have never bought that because it didn't, we didn't have a break of this trend line. And really, I think the trend line was way up here, and I was even wrong. There's a temporary little trend right there and a break and a low, and then you kind of get a correction and it starts over. So short term, you could see that a little steeper line there with a break and a retest, but that's really I'm being aggressive there, and there's been no break yet, so I was being real risky by buying that. But like I said, what makes it okay is there's a little bit, or semi-okay, is there's a trap there and a strong support, and we all know what's been happening every time prices find that lately. And you could have gone long even here, wouldn't have got anything more than a scalp. This one's was even more dangerous though, because you got to buy high again. So that's why I didn't mark that one, and that's why I didn't try to add back on there or anything. I was happy to get out, and then I realized, it didn't take off. I expected it to take off kind of like that, and it didn't. So I was wrong. But hopefully that makes sense to you. Then you get a new high here right at this previous resistance. We break lower. You might have thought about entering on a first entry, and really, you might even look at this like one leg up, even though there's two legs, pull back, second leg up. So you might have looked at that like a second entry, but when you start trending higher the other way, you need to count off the other side, because now we're trending higher. So I saw a first entry long, kind of a pull back right there, and then that little trap. Second entry long, and it failed. So I saw that kind of like a second entry long trap. Then I realized, hey, the trend line's probably up here because I moved it up here and it's fitting, and we got that little trap. You probably would have wanted to use a limit order here to see if you could get it, near here or back to here. You couldn't have got all the way back up here, but you probably could have gotten a little better entry with a limit order there than besides using a stop. But I still like it's a second entry short, and you might have even waited on this bar and a break and then use the limit order, and you almost get the same thing as a stop right there, and then it takes on off. So and you got to be thinking, hey, this is looking like a little range right here, and we'll probably come back down to here. And you see it did find support temporarily, but it was only temporary. And then you get a failed second entry long. Notice this first entry coming down, and that's like a little trap right there, and it reverses. So I liked going short right there. It's a little more aggressive because it kind of looked like this was the lows, but there's a trap there. So I kind of like that one, but it is aggressive. I marked it in green. If it would have gone on out this side before it closed, I would have liked it even better, and I might have even made it red then. But because it didn't, and it's way away from the EMA, it's down along what at the time looked more like the lows instead of the instead of a median line. So it's just kind of risky, but I like that setup, so I marked it. And I didn't see anything else. Notice how we get choppy and we're not going lower. We came back and tested that line, and there's probably even a short right there. See if it would have worked, but it's just, it's really aggressive. 62.50, and you see it wouldn't have worked, 4-tick failure. And it's kind of the same thing of going highs up here. You don't want to be going low down here. If you want to go short, you got to wait till it gets back up near the highs. And then you had a little two-legged correction. I marked this one in lavender. Notice that we got a little trend channel working up here, and I just drew it off these two lows and drug it up, and it seemed to kind of be fitting up here. It fits even better right up there, so that's probably more like it. But this setup is similar to this one, but let me show you why I like this one and not this one. And I had this same conversation with somebody from yesterday, I believe. But they said, hey, this looks just like this. Why would you take it here and not take it here? Well, the difference is that things look different here. Where you're selling down here near the lows, where you've had this line running across here, and so you're selling low. The same thing that I scolded the guy for going long up here. If you're going to sell, of course you got to sell high, and this does look high compared to this, but there's really, if you draw your lines, it's easier to see. Can you see that? Maybe now. Look at all those matching highs across. That's a double top. And so that kind of makes you think you might even be going short right there, but it's just a trading range kind of deal. And then your bottom lows are right there, and there's not enough room really to scalp out. Plus we're coming off the lows of this suspected trend channel line, so the odds are we're probably going higher. And at this point, I still wasn't completely convinced that this wasn't right across here, and we had a little break, and you might get two legs down. So you had to think we're at least probably coming up to test this line, and that's exactly where it went, and it tried it twice and then turned down, and you can see that short right there. You got a new high, pullback, first entry long, and that's a second entry short right there. First leg, then second leg, and it's coming off that line where I originally had it right there. And but again, later on, I think that it was more accurate being up there. But that's what gets you to this right here. At least that's what got me to that right there, and that's why I like that. Plus, it's a failed breakout of this little range here. It's a second entry short. You're selling high. It is a little bit choppy looking, but this is more your congestion, and this is like a little breakout pullback short too. So hopefully you can see that there. But study that. But that's why sometimes the same pattern, we're not pattern traders. We're looking for certain patterns, but you got to take all the price action into aspect, and you have to take the context of where it's setting up. If we were just pattern traders, we'd take every second entry, and guess what? A lot of them would work, but a lot of them would get burned on. And even this one, I almost marked it in green because it's just a little bitty doji, but that's why I liked it, because it was coming off what appeared to be a trend line, but it's so small you get a little bitty stop, so it's a real it's a real low risk entry because of how small you can be. 2 ticks above that, and you'd only have about a 4 or 5 tick stop right there. So that's what I liked about that. But anyway, that was the last short I saw. That was a nice, easy trade. It kind of took off real quick, and really that's a breakout. That's a retest kind of this breakout area right up here. It's really more from across over here, I think. But normally you'll get back and test that, but we couldn't there. That was the last high, and that's the last it could get, and it tried to go up again and then failed. And you got to figure that you're probably coming back down here to test these lows, and you can see it did, but it went straight on through. And you might have even thought about entering right here, but it's getting so close to 1 o'clock because that's a failed second entry long. I don't even know if it worked. So much overlap there. But if you entered, it would have been 61 and a quarter, and you see it failed too, but it came back down. But that's getting so close to that 1 o'clock. Um, and you see that's the kind of thing that happened. It did end up working out, but look at that move, and you don't want to ride that out, and it's haywire. And that moved all in about a minute or less, and so you don't want to get stuck in that. So better to skip that trade, even though there was a long trap there. The only way you could have really gotten into it was with a limit order. If you did use a limit order, it came back and filled it, and then you would have gotten out. You can see that, but it's so close again to 1 o'clock that I just say cut it off, and that's really all I saw today. And you know, there's been some more trades since then. It kind of settled down a little bit by here. There's you a nice little two-legged pullback after a big leg down. You know, you could see a measured leg there, and you see you got a whole lot more than that right there. But notice what happens normally when your second leg is bigger than your first one. Look at this third leg, and I bet it's a measured move of leg one. There's leg one, and then you got the bigger leg, and then there's leg two, and it's maybe one tick bigger than that. So you'll see that a lot. So I've shown that to people before. You don't see it all the time, but just watch for that. If you get a you're getting a three-legged move, and one of them, and like the middle one, is much bigger, then generally the next leg will be equal to the first leg. So, and that's kind of what you got right there. So that's what I saw today. And also, you know, draw your little short-term trend, you know, corrections. I didn't show this one, but there's one right up through here. You got your break and your new high, and that was another reason that, you know, I like that entry right there. You got this one working up, you got the break, you come back and you got the new high, and then it turns down. But of course that all happens so quick. But that just shows you, even during the news, the price action is still valid. It might move a little further, and it definitely moves a lot faster, but it's still valid. And you can see that right there. You had this little channel working up, you got the break, news came out, you get the retest of a new high, and then it starts trending down again. And even the bigger channel is holding here, and then we kind of broke down, and it overshot up here. Notice it overshot down here, and then you can see it held again right here, and we're trying to get outside of it now. And now we had this little channel working up. We got a break. We'll probably get a retest. So draw your shorter term trend lines, use them. They're valid, and they help keep you on the right side. And you would have known not to be looking for shorts until, at least after this right here, you would have known not to look for shorts until this break. Usually that first move down is kind of like the first signal that, hey, the bears are coming back, so be ready, and then wait on the next one. And that would have got you in there and definitely there. And so you might have considered entering right there, but I liked waiting on this one and trying to use a limit order, or, you know, you could still use a stop. It's a lot of congestion right there, but it's the reason you're getting congestion is because of this resistance across here and this line, and it's the first break of this line. So the bears are still in charge. The selling is still the the most important thing and what you need to be looking for, and that's why it breaks on down. But that's why you start to see that congestion there, because the bulls are running out of steam, and they're still trying, but they can't take it higher, and it causes it to congest. And that's generally what happens at the lows and so forth. So I hope that makes sense to everybody, but I'm going to wrap this up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.